The best things to invest in for 2025. Welcome to your 2025 investment guide. Are you ready to make your money work harder this year, even as markets wobble and headlines scream about a potential US economic crash? I am your financial analyst, and today I'm breaking down the smartest investment moves for 2025. From safe havens to high-growth sectors, I've got a lineup that could help you weather the storm, and maybe even come out ahead. Stick around for the next few minutes, because I'm about to reveal what the experts are watching, what I think holds real promise, and why the establishment might be steering you wrong. First, let's set the stage. It's March 15th, 2025, and the US economy is on shaky ground. The S&P 500 is down 10.1% from its peak. The Nasdaq's taken a 14.2% hit since December, and fears of a recession are creeping in, especially with layoffs at their highest since the pandemic. President Trump's tariffs and a looming government shutdown tonight are adding fuel to the fire. But here's the thing. Chaos often breeds opportunity. While the establishment wants you to panic sell, I'm here to show you where to double down or play it safe. Let's dive into the best investments for 2025, starting with the safest bets and moving to higher risk, higher reward options. 1. Safe havens. If you're feeling nervous about market volatility, and who isn't right now, let's start with some low-risk options to protect your money. High-yield savings accounts are still a solid choice in 2025, even after federal or reserve rate cuts. Online banks are offering rates that beat traditional banks, often around 4 or 5%, according to recent data. These accounts are perfect for short-term goals, like an emergency fund or that dream vacation, because your money stays liquid and safe. But don't expect big returns. This is about stability, not growth. Next up, certificates of deposit, or CDs. With interest rates expected to dip further this year, locking in a fixed rate now could be a smart move. A one-year CD from an online bank might still get you 4% or more, and it's federally insured. CDs are great if you've got a specific goal, like a wedding or down payment, coming up in the next few years. Just don't touch the money early, or you'll face a penalty. Finally, let's talk bonds. Government bonds, like US Treasuries, offer a steady stream of income with low risk. They're paying decent interest over 1 to 30 years, and with the Fed likely cutting rates, bond prices could rise. If you're a retiree or just want to reduce portfolio risk, consider a bond fund like Vanguard's BND, which tracks a broad US bond index. It's got an expense ratio of just 0.03%, so you keep more of your returns. 2. Defensive investments. Now, let's step up a bit to investments that can weather a downturn while still offering some growth. First, real estate investment trusts, or REITs. Despite a rough few years, REITs are rebounding in 2025, with the S&P real estate sector up 1.6% as of March 12. Why? Strong demand and rising rental income tied to inflation. REITs have to pay out 90% of their taxable income as dividends, which means steady cash flow for you. Look at REIT ETFs for diversification. Less hassle than owning property yourself. Dividend stocks are another winner. They've been outperforming in this market downturn because they provide consistent income and often come from stable sectors, like consumer staples. The Consumer Staples Select Sector SPDR Fund, ticker XLP, is up 1.4% this year and yields 2.7%. Think companies like Procter & Gamble. People don't stop buying toothpaste, even in a recession. The Vanguard Dividend Appreciation ETF, ticker VIG, is also beating the S&P 500 in 2025, offering both income and some growth potential. 3. Growth opportunities. All right, if you're willing to take on more risk for bigger rewards, let's talk growth. First, small-cap stocks. These smaller companies are riskier, but they're poised for a comeback in 2025 after lagging behind mega caps like Nvidia for years. The market started broadening in late 2024, and experts at Fidelity think this trend will continue. A diversified small cap ETF like Schwab's SCHA gives you exposure to over 1,100 companies with an expense ratio of just 0.04%. Small caps can deliver double-digit returns over time, but you'll need to hold for at least 3 to 5 years to ride out the volatility. Next, artificial intelligence and machine learning. Despite the tech sector getting smacked down lately, down 14.2% in the Nasdaq, AI isn't going anywhere. Global R&D spending hit $2.5 trillion in 2024, with AI getting a huge chunk. Companies like Tuya, a Chinese tech firm, are up 89.9% this year thanks to innovative AI applications like fitness cheerleaders and energy-saving tools. But here's my take. The hype around AI is real, but valuations are sky high. Nvidia's at a $3.4 trillion market cap with a PE ratio over 30. I'd look at smaller players like Tempus AI, up 75% this year, which is using AI to speed up drug development. Finally, international stocks, especially in emerging markets. US stocks are expensive, but places like China and India offer value. China's equities are showing signs of a rebound with government stimulus, and India's GDP is growing at over 6.3%, driven by a rising middle class. Morningstar's analysts are optimistic about Chinese stocks for medium-term gains, despite structural challenges. Look at funds like Vanguard's Emerging Markets ETF for broad exposure. Alternative investments, 1.5 minutes. Let's get a bit unconventional. Gold has been a standout, rocketing past $12,600 an ounce in 2024, and it could climb higher in 2025 as a hedge against inflation and geopolitical tensions, like the Ukraine-Russia ceasefire talks. But Trump's policies might keep U.S. interest rates higher, which could cap gold's gains. So don't go all in. Tin is another one to watch. It's the best-performing base metal of 2024, at $29,150 per ton, thanks to its role in AI tech. Think semiconductors and EVs. Analysts predict it'll hit $45,000 by 2033, so there's long-term potential here. Lastly, convertible bonds. These hybrids pay interest like bonds but can convert to stocks, giving you upside if markets rally. Fidelity's pros see a golden age for convertibles in 2025, especially with deregulation and tax cuts potentially boosting U.S. stocks. Closing and critical take. So what's the big picture for wanna play it safe? Stick with high-yield savings, CDs, and bonds. Want steady income? Go for REITs and dividend stocks. Feeling bold? Small caps, AI, and emerging markets could be your ticket to big gains. Just don't expect a smooth ride. And if you're hedging, gold and tin are worth a look. Here's my critical take. The establishment wants you to chase the latest hot stock or panic sell when markets dip. Don't. Patience and diversification are your best friends. Investopedia's experts nailed it. Staying invested for the long term beats trying to time the market. So, pick your mix, stay informed, and don't let fear drive your decisions. I'll be back with more insights to help you navigate 2025. Thanks for watching. Now go make your money work for you.